What is going on, guys? Hope you're having a great day. Today we are going to be talking about the base breakout, and hopefully you guys understand what we talked about in the last class and how price corrects itself in two ways, either through a pullback or through a base. Okay, and today we are going to be talking about the base breakout or the base breakdown setup. Okay, so let's get right into it. So the base breakout, what is it? This is one of the most potent and fundamental trading strategies that exist. In fact, this is my favorite trading strategy that exists. I make money off this setup every single day, okay? Because I see it all the time. It's a very, well-known setup, and if you know how to play this setup correctly, I can promise you are going to make a lot of money trading, either whether it's stocks or crypto or Forex, okay? It's that powerful of a setup. And like we talked about, a base or a consolidation is a period of time when a stock or a crypto is trading in a particular price range. It's not moving out, it's not moving above or below that price range, right? It's sort of staying at the same price level. And our goal as traders is to take advantage when price breaks out or breaks down out of that range, right? We're timing our entry when price breaks out or breaks down. This works on any financial instrument, including stocks, crypto, and Forex. Okay, this also works on any single time frame, and it's a very good high reward to risk setup. That's one of my favorite parts about it. So let's understand the anatomy of the base breakout. And we kind of looked at this before, but let's try to get a deeper understanding. So like we talked about, price corrects itself either through a pullback or through a base. Okay, so in this case, we're talking about the base. So after a large rally higher, we have a base where price is sort of, it's not trading above or below this price range. We're just sort of chilling at the highs of this rally, right? And our goal as traders is to find the moment that price breaks out of this range and continues higher. So we want our timer entry over here, right here. Okay. And we have to understand that in a bullish uptrend, right, if there's a lot of buying pressure in that stock or crypto, after a large move higher, oftentimes it's going to correct itself through a base. So it's really important that you guys can identify when this is happening so you could take advantage of it and take advantage of this point right here so you can enjoy the next move higher and hopefully make a lot of money. Okay, and I believe that's all. So just remember, guys, during this process, price is correcting itself, and as soon as it's done with the correction, we're ready to continue higher, and this is where we're buying it. Okay, so this is kind of a little graphical representation of this. We have a rally, and then we have a bunch of candlesticks that are trading in, at the highs of this rally. We're trading in this price range. And just understand that at the top of the base, right, at the highs of the base, that is an area of resistance, right? Because the candlesticks are sort of respecting that high of the base. So it creates a resistance. And the same thing happens at the lows, right? The candlesticks are respecting the lows of the base, right? And that's going to be support. So if you ever see a base like this, just understand that over the highs of the base, we have an area of resistance there. And under the lows of the base, we have an area of support there, okay? So let's talk about the actual base breakout setup and our entry and stop loss, okay? So we have the rally, we begin to consolidate, right? We are going to place our entry over the highs of the base, and we are going to be placing our stop loss under the lows of the base, right? So let's say you have a base like this, find the absolute highs, right? In this case, it'd be over this candle, and place your entry over the highs of that base. And my recommendation is, let's say the highs of the base is, let's say it's $6. You want to place your entry at about 602, 603. You want to give it 2 or 3 cents room, okay? So you give the stock or crypto the actual room to break out and truly break out of this resistance, okay? And the reason our entry is above the highs of the base is because that's when price is breaking that resistance, right? We're timing our entry with the break of this resistance, all right? And for our stop loss, we're placing our stop loss under the lows of the base because that's where we have an area of support. So this is super easy, guys. If you see a base and you wanna play it, you wanna get into it, entry is over the highs. Find the absolute highest point of the base and place your entry above that high. Place your stop loss under the absolute low of the base, okay? That's your entry and your stop loss. Pretty easy stuff. Now, let's talk about the 20-day moving average requirement. We already reviewed the 20-day moving average and how important it is. And we know that we want to see the 20-day moving average either trending higher or trending lower, right? If we're bullish, we're in an uptrend, we want to see the moving average trending higher, ideally at a 45-degree angle, and under price, okay? So that's what we need here. For a base breakout, we want the 20-day moving average to be trending higher and under price. That is a requirement. You need to have that if you want to play the base breakout. It is the most crucial requirement, okay? And the reason we want it is because oftentimes during a really bullish uptrend, stocks and crypto, they tend to base into the 20-day moving average. They tend to just, consolidate right into it. And as soon as it's at or near the 20-day moving average, that's when it ends up breaking out. Okay, this is just something that happens. Okay, and we're going to show you guys examples of it soon. So something to understand is that at this point right here, right, let's say we're right here, we are extended from the 20-day moving average, right? And by extended, we learned about this prior, is that we know that extension means distance. There's distance between the 20-day moving average and price, meaning price is kind of overbought, right? It's a little extended. So what do? We need to have a price correction. So we end up basing. And as we're basing into the 20-day moving average, price is correcting itself and it's getting ready to make the next move higher. So our goal is to time your entry when price has based into the 20-day moving average, or we just want at least the 20-day moving average to be near price. Okay, we don't want to be buying it here because right here, there's still some distance between the 20-day moving average and price. There's still some extension. We want to be buying when it's at or near the 20-day moving average when there's no extension, okay? When there's we're not overbought at all, okay? Hopefully that makes sense. So overarching theme here, guys, is for a breakout, make sure the moving average is trending and under price, and you want to be buying it at or near the 20-day moving average, okay? Let's continue here. And this is something that I oftentimes see. What I see often is a rally higher, then we begin to base. We begin to consolidate. As soon as we hit the 20-day moving average, we have that breakout. And our price is going to be at this resistance level, right? It's over the base. This line is directly over the base. This is our entry point. So we would be entering as this green bar is being formed. We would enter right there, and then we would enjoy these profits going higher. Now, oftentimes what I see is after this primary breakout, after we break out of this resistance and we continue higher, I often see us having another sort of price correction, but this time it happens through a pullback. So after this rally, we actually pull back, okay? And we form a buy setup, or you could call it a secondary breakout. We're going to be learning about the buy setup later, but oftentimes after this initial breakout, we pull back, we form the buy setup, and then we continue higher. And you can think of this as a pullback pattern, right? Like I said, we're going to be learning about that in the next class. But what I really want to emphasize here is oftentimes this line right here, this entry point, this is serving as resistance, right? We're buying it when it breaks the resistance of the base over the highs of the base. But this prior resistance level, right, is now turning into support for the stock or crypto, where we actually pull back to this prior resistance, which is now support. So during this point, it was acting as this resistance level was acting like a ceiling. As soon as we broke out of that ceiling, it's now turning into support. And we retrace right back to that support level before we continue higher. Okay. Now, this doesn't always happen, but I think it's something to show you guys. I think it's important. Here's an example of that. Okay. Where we have a large rally higher, right? Look at this. We have a rising 20-day moving average. We have a huge rally higher. Okay. At this point right here, there's significant extension between price and 20-day moving average. Price needs to correct itself in some way. So first, we have a pullback, and it sets up as a pullback pattern or a buy setup, right? That triggers higher, that goes higher, but there still needs to be some sort of correction, right? This was a huge move. It needs additional correction. So what do? We base, and we stay in this price range, and we stay in this price range until eventually the 20-day moving average, this blue line, starts to curl under price. It starts to trend higher. And that's when we get the base breakout right here, where this red line is the entry point. This red line is the resistance. We break out of that resistance and we enter right here. We rally higher before we have that pullback. And this prior resistance, which was our prior entry point for this primary breakout, it now becomes a support for this pullback. Okay, hopefully that makes sense, guys. All right, okay, very good. Next, excuse me, we're going to be understanding the base breakdown, which, guys, the base breakdown is the absolute opposite of the base breakout. It's the same exact thing, except it's the opposite. We're going to be taking advantage of shorting it. Okay, but nevertheless, I'll go over it. As we know, price corrects itself in two ways, either a pullback or a retracement or a base. So we have a drop, right? Let's say this is a downtrend, right? It's clearly a downtrend. We have a lot of bearish momentum. There's a lot of selling pressure. We have a drop and we consolidate at the lows, meaning, right, we have a drop. It wants to continue lower, but it needs to correct itself first. So it corrects itself through the base. We're chilling at the bottom of this drop before right here we have that breakdown. We short it. We have a nice move lower, right? We short it right here once it's breaking below this base. That's why it's a breakdown, right? We have a drop. And then we start to base again at the lows of this rally, right? And we have another breakdown here where we're trying to enter when price is breaking down out of this bearish consolidation. Okay? So like I said, guys, our goal is to catch the moment price breaks down and enjoy the next move lower, and we're shorting it. Okay? And we have to understand that in a bearish downtrend, whenever we have a downtrend, price tends to base after a large drop. That's just what happens. Okay? That's the way price tends to correct itself. It tends to correct itself through a base at the lows. So the same thing here. After we have a drop and we have this consolidation, we have these candles trading in this price range. At the bottom of the consolidation, we have an area of support. And at the top of the consolidation, over the highs of the base, we have an area of resistance. The same exact thing as we discussed before, except the opposite. So what's the entry? It's the same exact thing, except the opposite. Our entry is going to be under the lows of the base, and our stop loss is going to be over the highs of the base, right? Because we are entering when price is breaking that level of support. That's when we're timing our entry. And we are placing our stop loss over the highs of the base because that's where the area of resistance is. Okay? So yeah, to emphasize, we're trying to enter when it's breaking that support. And that's where we enter and we enjoy this move lower. Okay, so entry under the lows of the base, stop loss over the highs of the base when we have a breakdown. Okay, very good. Let's continue. So just like the breakout, we have a very strict 20-day moving average requirement. Like I said before, we want the 20-day moving average to be trending lower and overprice when we're in a downtrend or when we're bearish, right? We want it to be trending lower and overprice. So that's a requirement. And oftentimes, stocks and crypto, they base into a declining 20-day moving average. This is the way they correct themselves. Because as of right here, at this point here, price is extended from the 20-day moving average. And by basing into the 20-day moving average, we have that price correction and we're finally ready to short it as soon as it breaks under that base. And we want to time our entry when price has already based into the 20-day moving average. Okay, it's the same exact idea, guys. And same exact idea here as well. We have a drop, we base, right? Our entry, this is our entry point, which is the area of support. So we're timing our entry when it breaks this area of support, right? This is the primary breakdown that we're playing. We're at the 20-day moving average. We drop, right? Because remember, we shorted it here below the base. This is the primary breakdown. And oftentimes we have a retracement. And this retracement goes back to the declining 20-day moving average. And also it goes to the initial area of support, right? Our entry that's now becoming resistance for this stock or crypto. Okay, and this is our first retracement to the 20. This previous area of support has now become resistance. Okay, this doesn't always occur, but I thought it was important to share it with you guys. And we're going to be talking about reward to risk in the next class.